Hello traders. My early morning video, I'm doing it late night. It's early in Sunday evening, and it could all change in the morning. But hell, Asia hasn't opened, and Europe definitely hasn't opened. But it looks like a really bad start for March. We're gapping down from Friday's close, but we're still within the body of last month's candle. But we're trading on the cues. That's the main thing. This trend line, which I talked about all day Friday, we are trading right around that trend line again, right here, right now, in the pre-market, the overnight session. They open at 6 p.m. and the volumes are amazing. We're seeing in the markets right now, and quite amazing on the futures. The futures have expanded on the implied volatilities, something horrible in the overnight session. So they're expecting a much wider move in these markets than they were pricing in even Friday. So just keep that in mind going forward here, just how much expansion the futures are implying right here, right now. So that is never a good sign. But it looks like to me that to start a month right on this trend line, very worrisome that we are going to have a continuation to the downside, especially on the cues to start our month going forward here. Some things that I was looking at here going forward. You see, we have 1, 2, 3, 4, 5, 6 weeks of value that built out at this price zone right on above this trend line. So I was actually going into the first of the week thinking that this is a good area for a dead cat bounce, even though the futures right now do not seem to imply that happening. We are back down to that trend line near Friday's lows as we speak here in the markets. So keep that in mind going forward here. We held this trend line, managed to hold this trend line Friday, but all bets are off. It looked like to me, I don't know if a lot of you have noticed what happened there in the final hours. Look at this volume into the close. This here is where you would typically, with that high volume situation on a Friday OPEX, it implies that there might be some sort of bottoming pattern and that we might actually get a pop in today's options. But we all know that we've got a 3 standard deviation move, which is a very exceptional standard deviation in if you're selling option premium. So keep that in mind. If I could show you another chart here, I'll show you my. Honestly, I'm doing the cues here. So give me 1 second here. I'll get her pulled up on my standard deviations. Okay, these are my Bollinger Bands on the daily for the cues. So we are, okay, here's your neutral. 1, 2, no, blue one up here. It's that blue one up here. 1, 2, 3 standard deviations. The red one's your third standard deviation. Well, typically what option premium sellers are going to do, they're not going to anticipate a break below a 3 standard deviation move. So they're going to be selling option premium down in this area, the 3 standard deviation zone, and taking in a credit for it to expire on Friday. So what we had happen here on Friday, and if I want to go down in time frame, okay, that area on that 3 standard deviation, okay, this was all down in that 3 standard deviation area, okay, and they had been selling option premium. The big money came in and popped it up into that last 15 minutes. Is 4:15 is when the options close on the SPY and the Qs. So keep that in mind. You get that 15 minutes after. They popped these up just enough for all those big money, big firm option premium sellers to get themselves out of the money for the Friday session. Okay, and then as of today, we are gapping down in a big way on our futures. So that's something to keep in mind going forward here. What was going on there? It was more about screwing over the put holders and for the big firms to cover their positioning. So because basically they could do this, they knew they were going to lose a lot of money down here. So investing money into the close to push price the last very few minutes didn't take a whole bunch of money, but they can save hordes of money by wiping out all these options and all this option, making all these people who held long put positions that wiping them out, and they can make. And so even if the markets were down, as long as they don't gap down and away, they're actually making money by causing a situation like this into the closing session. Um, and So I kind of expected something like this. That's why I went ahead and got the TLT puts and the VXX puts, because they were both so elevated into the going into the final hour of the session, final 2 hours of the session. So I did get those. My VIX, even despite the big sell off, they were still showing that I was making a profit on my VIX in the overnight here. So I just wanted to point that out. I don't want to put that in here right now, but so basically, we'll get into that here in just a minute. Okay, we have a similar situation on SPY. Basically, you got 1, 2, 3 weeks. Uh, right here in this relative zone on S&Ps. I thought maybe with Q showing the time value built out at this price point, that we might see a response to short squeeze into Monday. Especially seeing this 3 standard deviation situation going on. I kind of thought they were going to squeeze into close, which they did the final minutes, but the news flows are so bad that the futures are really looking bad so far going into tomorrow's session. But it's still early, but it really, really does look bad. We're back to the lows of Friday's session as we speak, but we're still not breaking down, so that is something to hang your hat on. And this is a nice little site that Mark had posted, and Martin had shared a link in the room earlier today. And we were down close to 600 points at one point today in this session, 550 or something like that, and we've already recovered somewhat. It was like a 2% drop on the Dow Jones. So keep that in mind going forward. We are recovering a little bit here, but not by much. But we are still within Friday's low. We're not breaking down as of yet. But like I said, most of Asia has not opened yet, and Europe hasn't either. So this might be turned into a consolidation zone, and then it might not. So just keep that in mind going forward here. And it's just important to note, even in the 2007 crisis, it was virtually unheard of to see a 4 standard deviation sell off on the daily. So by crossing below the 3 standard deviation, we typically get some responsive buying, some call it consolidation sideways, for possible another leg lower. So just keep that in mind going forward here. You don't want to be loading the boat at these levels, seeing as we've really, really been taking it on the chin pretty heavy here in these markets. And like I said, you see all this consolidation going on here. We're down in this zone now on these markets. So we are in this consolidation zone, and we've had responsive buying here, 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 here. So we've got 4 points for sure that we've found support at these levels on the SPY, and we are still within that trading range from Friday. So I mean, it's not an outright full-on breakdown yet. We'll see how things go in the morning. And our Russell seems to be faring a little bit better versus the other indices, only down 0.5% on the Russell. So that is something to hang your hat on, I guess. 468. We are coming back, only less than 0.5% loss at we're seeing right here, right now. So just keep that in mind going forward here. Multiple times now that we've seen some time now support for Russell at these levels, and so it's important to keep that note of that 460, where is it? 469. 469's up here. Okay. So we've had support all the way through here, and it wasn't back until 2019 we broke that area. So this is a volume point of control, a monthly volume point of control that we seem to be holding above as we speak right now. So we do have quite a bit, and like I said, the Russell's not doing that bad right now. Okay, I had mentioned in the room about TLT having some pretty significant resistance that it was running uh, into the session uh, Friday. And if you go look at your ZNs on the 5 minute here, and that's your 10-year Treasury futures, as you can see, that didn't work out too well so far. So here's your Sunday session. We were opening above Friday session, and we do have responsive buying up here. Now, if you go back on your TLT real quick here, if we break above that, it's important to note the 159.20 area is the next serious resistance area. So we're probably marking about 158 area. We probably got about 158 for the high. We won't know till around 4 a.m. to see where TLT is marking for sure. But I think around the 158 area is where we're marking. So we may not actually even have the highs in for TLT quite yet, but something to keep on watch going forward. This is a much more stable resistance zone, this one here, than this one below here. So just keep that in mind. This is a much more significant area for resistance. So far in the overnight session, this is really important to note going forward here. The VIX is not putting new higher highs in. Actually, we are bleeding off on the VIX as we speak. So that's something to note going forward here. That volatility at these extremely high levels, it's really finding trouble to find a bid here. And whenever you have VIX near 50, I mean that's something very difficult to sustain. So just keep that noteworthy going forward here. A VIX that near 50 is, very, and that's why I didn't mind taking the VIX trade to the short side going forward here. And so basically we had that end of day bleed off, and now we're popping back up to the highs, and we're already bleeding off, and we're getting off not too far away from that end of day collapse in the VIX. So we could very easily be opening at or below where we closed on Friday on the VIX, even though the indices are showing a little bit more relative weakness than what the VIX is actually showing us here. Quick look at our treasuries. 1.13. This is going to probably be, as we speak, we're probably looking at 1.10 on our 10-year treasuries. Potentially having a further flattening of our yield curve. So just keep that in mind going forward. You compare your 2-year versus your 10-year typically, and so it's even a worse situation for our financials. Now we'll see how the financials open tomorrow with the bonds selling off. We're probably going to be back down to the lows, but this has been a support zone for the financials in the past. The primary support, though, is all the way down to the 25.18 area. So keep that in mind going forward here. That is much more supportive for prices, in my opinion. So we'll see how things open. Like I said, the markets were trying to open the Friday close, but seeing the bonds spiking to new highs, this is going to lead the financials to break below faster than most of the other areas in the market. So keep that in mind. We're probably going to be gapping down below Friday's close, below Friday's lows on our financials tomorrow morning into the 25.14 area. So very high odds situation that situation is going to ensue tomorrow. JD's reporting overnight, so this is really important for about the health of the Chinese consumer. So just keep a very close eye on this going forward here. Uh, this is going to say a lot about how what the coronavirus is doing to China, because companies like JD, they're delivering groceries and stuff to people, and they're getting a lot of business from this. But the true impact on the coronavirus, if it's going to, of all the companies in Japan to benefit from it, JD is going to be the one. And if they tank this stock, you've really got to be concerned going forward here, um, that there's a far greater problems setting up in the future. So this is one to really have on your watch going into tomorrow's session, how price action impacts this stock. And if they get a nice gap up here, it's going to be quite supportive for the markets, in my opinion. It might be a smaller company, and it might be a Chinese company, but it's going to alleviate a lot of the anxiety about the impact from the coronavirus if this company can manage to muster some good momentum into the morning session. Tilray, a marijuana stock, which these marijuana stocks just look absolutely horrible. It is reporting tomorrow evening, so yeah, just keep that in mind going forward here. They are loaded with debt, but companies like this, typically in a major correction, debt-ridden companies, they don't perform very well. So just keep that in mind going forward. There is a huge short interest in Tilray, so that's the problem. That's the rub. You got companies with a huge short interest, and they come out with very very strong numbers. It can explode on you to the wrong side, wrong direction. So I know I wouldn't be short Tilray going into the numbers, but that's just my suggestion, what I believe in. So Co's had a horrible last quarter, and they've already guided lower. So this thing here, under the current market conditions, man, I don't know here. It was a holiday season. I don't know how the market's going to deal with this, but man, you have to go back. I did the 3 year weekly, 20-year weekly. It's going to be quite interesting what happens here with Co's after this holiday season. They say we had record sales for the holiday season, so this is like a target in my opinion. I'd be really concerned about a lot of short interest already built up in it. So that's one I would not personally want to take to the short side. We got AutoZone, which they're getting a lot of pressure from Amazon selling a lot of auto parts here lately. Look at this rocket move up here. Sold off. See here. Did it sell off on last earnings? Let me go back here. Had a really good earnings. Been selling off ever since. So they had good earnings, good guidance. But it's if the markets are in a correction mode, I mean, this thing here is just primed for more problems, in my opinion, with the multiples being so high. I'd be concerned about trying to press this to the upside, in my opinion. Then you have Target reporting Tuesday morning. And they're expecting some really good numbers out of Target this quarter, but it's like everything. None of these companies are going to be able to give forward guidance going forward, and they're definitely not going to be able to raise numbers under the current corona situation. So you have to be extremely cognizant of what's going on here. And if you go out in a 20-year weekly, you see just how high Target has gotten in face of the fears and stuff going on here. So really important to note, this is their primary trend. We are still at near the top of that trend. So a correction down to the lower ends of that trend does make sense, in my opinion, on even Target. Nordstrom's reporting Tuesday night. Not a very good company. Expect him to miss. Ross Stores. That's another one. Look at this skyrocket action in Ross Stores going on here. Like I said, these retailers, All these retailers are major exposure because of the whole Corona thing. Um, then we have Ambarella. Um, this is one that I think might be. This is a gaming software company. They might actually be a net beneficiary of everybody being locked home. I think they do Chinese internet mostly. This one here could really surprise to the upside with everybody being locked at home. So that's just a theory that I've got going on here. Urban. Uh, like I said, retail. I just don't know if they can support retail with everything going on here. If you look at your XRT, uh, and Amazon's been taking on the chin too. Your retail's hanging up here really high here. I mean, basically with all this retail stuff coming out this week, um, you know, it just makes sense to be um, to think that we're going to be coming down to or lower valuations for this whole sector. Okay, critical stocks to watch. That's your Apple. Okay, it came down to a 3 standard deviation breakdown there Friday. Okay, and after that, it managed to rally back to a 2 standard deviation, which at your standard Bollinger Band deviation. Okay, and then found some responsive selling into Friday. So we know it's going to be opening lower. We're most likely going to be opening lower Monday. So we want to see this thing actually get a closing price above Friday's high for a long potential long setup. And then that's something. And then we need a breakdown below Friday's close to break this support. So basically, Apple's untradeable right here, in my opinion, until we can clear this candle. This is a very important candle that Friday was put in. Microsoft came right down to the breakout, which actually coincided with a 3 standard deviation. Okay, rallied back up above the 2 standard deviation. Okay, and closed right here at a weekly virgin point of control. Okay, so we got to keep a close eye on Microsoft. It needs a break above. Similar situation as Apple. It has to have new highs for Apple to the long side, or new lows for Microsoft, for Microsoft to the downside. This is Microsoft. Similar situation. It's a very wide candle you can't even trade, and those are the two major leaders in the market. So going forward into tomorrow, it all depends on whether or not our two leaders on the board are making new highs or making new lows. Okay, last one I'm going to talk about. That's your semiconductors. Very hot Friday. Extremely hot stocks. NVIDIA, AMD, Micron, very hot. We came right down to the 3 standard deviation again. This breakout zone. Okay. Found responsive buyers in Microsoft. Came right up to our monthly BPOC. Tagged it. Came off just a little bit. Okay, that's also right above our 2 standard deviation line. Okay, so keep that in mind going forward here. We need to break out above Friday's close to the upside, or break down to new lower lows, and that is both Apple and Microsoft closing near the highs of the session. It's really important, or Apple, Microsoft, and semiconductors, really important to realize the way we set up Friday, it's going to be hard to break down to new levels going into Monday. But we'll see what happens going forward here. Okay, that's it for my video. One of my longest I've had, and I'm sorry for it being so long. Like the video if you like it, and please leave comments below for stuff you're seeing and stuff like that. I kind of think Monday we aren't going to actually break down, and we're going to start trying to build out sideways. That's my theory. Okay, thanks a lot.